There are 3 tax traps to avoid in retirement. You have a silent partner in your IRA and 401k, and his name is Uncle Sam. That's a quote from Kiplinger. Most people have never considered this, but the reality is that your IRA and 401k are joint accounts with the IRS. The dollars you contribute to either of those accounts are dollars that have never been taxed. Ultimately, Uncle Sam will determine how much of that money you keep and how much he takes. How and when you withdraw money from those accounts can have a huge impact on the amount of taxes you pay and how much you keep. It's possible that you could wind up keeping a smaller percentage than you planned. Today, tax rates are the lowest they've been in the past 35 years. Currently, the U.S. national debt is more than $25 trillion, and it's growing daily. At some point, Washington lawmakers are going to need more of your money in taxes. When they do, the money in your IRA and 401k are likely to be included. There are 3 big tax traps that are avoidable for anyone thinking about retirement. Here's trap number 1, not having a withdrawal strategy. If you're not careful, you can ruin a lifetime of successful saving when it comes time to withdraw money from your nest egg. That's a quote from The Motley Fool. Saving money in your retirement accounts is easy. Money is automatically withdrawn from your paycheck and goes straight into your retirement account. Withdrawing that money from your accounts can be complicated and confusing. Without a defined withdrawal strategy, money you accumulated in those accounts may be clobbered by taxes. Tax trap number 2, not having a strategy for taking required minimum distributions, otherwise known as RMDs. Think of RMDs as the IRS version of WMDs, weapons of mass destruction. That's a quote from Forbes. When you turn 72, as of 2020, you're required to begin taking distributions from your IRA or 401k. In the absence of a plan, RMDs could inadvertently result in moving you to a higher tax bracket, which means paying more in taxes. It might also force you to sell certain investments in an opportune time. This could result in less money in your pocket. It's critical for you to have a plan for taking an RMD long before you're required to do so. Tax trap number 3, failing to prepare for future tax hikes. Another worry that might be on everyone's radar is the likely increase in taxes that could occur as early as next year. That's another quote from Forbes. As mentioned earlier, tax rates are currently the lowest that they've been since 1986. At the same time, the U.S. government is $25 trillion in debt and growing. Currently, millions of baby boomers are retiring, and it appears likely that their IRAs and 401ks will be subject to increased taxes. It's critical for you to take preventative measures now to insulate your nest egg from higher tax rates. Make a small investment of time now to do some advanced tax planning and save a small fortune in taxes later. We can help you reduce taxes or potentially eliminate them in retirement. Our goal is to provide our clients with a worry-free retirement. We have expert advisors ready to build a plan that will help you reduce or even remove taxes from your retirement accounts. Contact us today to schedule a discovery call and find out how we can help you.